Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, March 3rd, 2010. Well, folks, the markets are fractionally positive again today, kind of like yesterday. The only difference between yesterday and today is that we saw a pretty hefty sell-off starting around 3 o'clock, 2:30 yesterday. Today, the sell-off began really around midday, even a little bit before, maybe 11:30 a.m. Eastern Time, and has continued for the most part all early afternoon here into the midday or early afternoon session. Now, interestingly enough, if you can look at the intraday chart here on the SPY, clearly you can see we hit the 50 moving average. We bounced up to the 20, came back down to the 50, pierced it, and then bounced back up. And what that's telling you on a technical basis is that the market has a significant amount of support and there's not much volume to push it below that 50 moving average. Now, and that's the problem today, folks. I talked yesterday in my intraday video about how light the volume was yesterday. It is even lighter today. As we approach 2 p.m. Eastern Time, the volume is 83 million on the SPY. My target for today is a new record for 2010 on light volume. We did get the ADP numbers this morning. They came out decent, actually. They weren't horrible. They weren't fantastic. But the key trigger was that the revised last month's numbers to actually a little bit worse. So you did get a little bit of downward revision from last month's ADP employment data, which is private sector employment. And then from that point on, we got a decent number for this month. The question is it going to get revised down next month as well, just like the previous month did here? So again, decent news there. ISM came out. ISM Services Index came out at 10 o'clock. That was actually phenomenal news, coming in the best in 2 years. So that gave us a little bit of a move up here initially on the day. Starting at 10 o'clock, we moved up nicely. Also, the dollar got pounded as well, which was a big trigger for the early morning run up. And again, I'll show you the chart on the UUP. We talk about how key the UUP has been in the trading, and obviously the UUP is the dollar chart here, but the markets continue to go in the opposite fashion, more or less. Now, the interesting thing about this, folks, is look at that dump early on, and then look at the markets trade sideways. So again, I talked to my premium members about this pretty much in depth over the last few nights in the nightly Research Center videos, which are 40 minutes in length. But the key here, folks, is this. When the dollar falls recently, it's been giving the markets a little bit of a move up. But as soon as the dollar stops falling, it doesn't necessarily have to bounce to cause the markets to sell off. In fact, what you saw yesterday, look at the dollar yesterday, kind of go slightly up and then sideways. Today, sideways, and this sideways action on the dollar is actually causing the market to sell. So it seems like the only thing that's keeping this market up right now, at least in the near term, is if the dollar is falling pretty dramatically. So here yesterday, we saw the dollar fall pretty dramatically, the day before dramatically, but now as soon as the dollar stops falling, the markets are reversing to the downside. So it used to be only if the dollar went up did the markets go down. Now it's sideways inclusive, or if it's not falling sharp enough, the markets can roll over. And again, sideways movement here on the dollar today, and look at what the SPY has been doing. So again, this is a little change in trajectory from what we're used to seeing on the dollar action. See how the market, when the dollar's gone sideways, the market's actually sold off here. Now it's finding that support line, at least for now, in the market. Spiders are up 44 points. Doing a quick check on the Dow. The Dow is up 26 points. NASDAQ is up 6 points, and S&P is up about 4 points. So about 0.25% across the board on the moves in the market. And again, just continue to watch that relationship with the dollar, because what that's telling you is that there's relative weakness out there, believe it or not. Because it's only when the dollar is falling that the markets can get a little bit of a bid up. And to be honest, the dollar's down pretty substantially today. If you take a look at the UUP here, let's punch that up. The UUP is down 17 cents just off the lows by 2 pennies right now, 3 pennies right now, and the markets are barely positive on the day. They're just holding the gain slightly. Now, the reason why you're having a little bit of weakness in the dollar is because stuff with Greece is starting to settle down. It's looking better and better for Greece itself. The question in my mind will be, what's the next country to really roll over here and have major problems with debt and defaults, at least the problems that Greece has been having over the last really multi-month period now at this point. Going to back to the SPY here, folks. Your intraday 10-minute again. Notice the small gap up this morning. We got just above this 50 moving average, 20 moving average. The markets continued up, paused, then continued higher into a key trend line at around 112.90 to 113. At that point, you started to just fade very slowly. Really down here, notice this red candle and then 1-2 inside bars. That's an in spirit of bear flag. Then you continue to fall right into the 50 moving average. And then since then, you've chopped around. You went up, down, and back up again. And really, guys, again, the volume is so light. I would like to see a break of this 50 moving average to the downside, but the volume being this light is going to make it very, very tough. All right, anytime you have volume that is this light in the market, any major supports are going to have exceptional ability to hold up in the face of any little bit of selling because there's just not that much volume behind it. So any kind of support levels with buyers right there, it's going to keep the stock price or the market right above it. And you're seeing that right now happen. It came down here once, bounced, came down here twice, bounced again, and that's where we're holding it. Now, if we could break that level at the 50 moving average, you should see a nice little continued sell-off to the lows of the day today. Now, yesterday that actually happened in the late afternoon. We came all the way down, piercing this pivot low from earlier in the day and actually making a new low of the day. Question is, can we do that again? And it's all going to revolve around this 50 moving average in the afternoon session, folks, all right? If the 50 breaks, you should see the lows of the day, possibly even gap fill taking us all the way back to about 112.20. And then possibly the lows of the day yesterday and the gap fill from the previous day. Interesting to note here, and something that was brought up in the chat room today in the intraday stock chat at inthemoneystocks.com, which again, all of you should be joining if you're any sort of interested in learning the techniques that we teach here in depth, or doing any day trading or understanding the swing trades as we call them out live in the chat room. Otherwise, you get them, within 60 seconds in the research center as well, pretty much live as well when we do the swing trades. But again, one or the other, we do recommend you pick it up as it's unbelievable. Will blow you away. We just took another 10% profit on Palm today. Palm continued upward move. That was one of our swing trade alerts from last Monday. On Monday here, guys, picking it up. So in 2 days, 10% return on PALM. Now again, guys, if you do come down here, and this is what I was mentioning before, notice the gap right here, not filled. Yesterday's gap, not filled. And if you go back even to Monday here, gap, not filled. So we have not had any gap fills. That's very, very unusual for a market to see that. All right, and that does tell me also that you may have a little bit of a downward move possibly coming in the next couple of days or so to fill some of those gaps. As again, usually when you get close enough, just the characteristic of a market is to fill the gap. All right, spiders continuing to inch up here. You could make a case that this is inside so far, inside bars, but if you get above that 20 moving average, you probably head back north into the afternoon session here, late afternoon, especially as the volume continues to just die out. Even yesterday's volume was better than today's. Early in the day, you had okay volume, and then look at it fall off a cliff here in the early afternoon session. Most people probably at this point are waiting for the Beige Book here. We do have the Beige Book coming out, I believe, here at 2 o'clock. There it is, guys. Yep, Beige Book just coming out here as it is just ticking to 2 o'clock. And it's helping the market slightly. And again, keep an eye on the dollar here. Let's punch up the dollar live as the Beige Book is just being released here at 2 p.m. Eastern Time. But that's going to be a key. Just keep an eye on that dollar. If the dollar falls, the markets continue to get a little bit of a bid. If the dollar rallies off of this, you probably see the market start to sell. If the markets go sideways or the dollar goes sideways, right now what we're seeing is the markets may sell as well. But down tick in the dollar right here, you can see a little bit of a red candle there. It's really been in a tight range. As we're getting comments out here, I'm just watching comments on the Beige Book come out. Loan demand stays soft. Lending standards remain. All right. District report, hiring uptick, but labor markets remain soft. Basically the same old, same old. From everything I'm seeing as these Beige Book numbers are coming out, it's really nothing new from the market. The dollar just upticked a tiny bit. We'll keep an eye on the spiders to see if that's going to push it down at all. Right now, again, you went up to that 20 moving average. That should be minor resistance here in the afternoon session. If you get through that, you have a decent chance of going all the way back to the highs of the day, and we'll continue to update our premium members in the research center on any new buys or sells. I did put out a new buy out in that research center hot charts and alerts, and again, it went out just as I did the trade myself live. And again, you guys can sign up for that for $49.99 a month and get everything included under that research center. It's an unbelievable value, folks. Again, just took another 10%. Last week we took 10% on EDZ. This week 10% on Palm. And again, there's multiple other swing trades out there that we're alerting on that we're either in the money or flat on in that range as we're continuing to accumulate some good plays going forward here. All right, that's all for today, folks. Just keep an eye on the dollar as the afternoon session. Watch the markets. Watch that 50 moving average to the downside. Watch the 20 to the upside. Watch which way we break. Whichever way we break, we should continue that way in the afternoon session. Take care.